I think we are at economic warfare. Everybody needs an enemy. So we've decided that China, Russia, and whoever we want to be our enemy is our enemy. So we are economic warfare for the share of the pie. But the world is not, it's not actually a fixed pie. There's an abundance. And that abundance is the other economic warfare, which is technology. Right? That's happening at a massive scale. I know what drives liquidity. It's driven by the business cycle. The balance sheet right now is what, $6.5 trillion, and it looks like it will get $7 trillion or so, and it looks like it will get to $12 to $14 trillion by the end of 2025. That puts asset prices massively higher than here, hugely higher.
Real Vision founder and CEO, Raoul claims to have discovered the key to significantly growing one's wealth despite the ongoing devaluation of fiat currencies. Despite being the world's reserve currency, the United States dollar steadily loses value, averaging a 7% depreciation annually. Over the past century, the USD has plummeted by approximately 96%, now amounting to just 4 cents on the dollar compared to the early 1900s. This rapid decline has occurred alongside a massive explosion in national debt and debt interest, raising concerns among experts about further currency devaluation. Renowned macro analyst and investment strategist, Lynn Alden, predicts a looming crisis that could render what are currently considered weak currencies obsolete, while making strong currencies relatively weaker. Alden forecasts an annual debasement rate for the dollar in the double digits, leading to higher asset prices, persistent inflation, and wider wealth inequality gaps. Despite these challenges, the wealthy are expected to largely remain unaffected, as seen during the pandemic relief efforts, which widened wealth inequalities globally. In a recent interview on the Impact Theory podcast, Raoul discusses how individuals can leverage government regulation of the economy to maintain and rapidly grow their wealth over time. Powell's strategy involves closely monitoring the balance sheets of central banks, as their printing activities directly influence the business cycle and asset prices. By following this simple approach of buying when prices are low and staying aligned with central bank actions, Powell believes there's no need to fear recessions or bear markets, as wealth can grow substantially.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
My hypothesis is that, okay, this is very observable. I think it's going to last, this relationship between assets and the central bank balance sheet because of the mechanism of debasement of currency. And I can forecast out what the business cycle looks like. And I also know the amount of interest payments that need to be made because they happened 3.5 years ago. And I can see how far the balance sheet's going to expand. So the balance sheet right now is what, $6.5 trillion. And it looks like it will get $7 trillion or so. And it looks like it will get to $12 to $14 trillion by the end of 2025. In the end, that puts asset prices massively higher than here, hugely higher. So we're looking at more than a doubling of the NASDAQ from here. We're looking at another gigantic crypto run. That's into 2025. So we're seeing huge moves that just come from the debasement. And I've gone through in the Everything Code article that I wrote for Global Macro Investor, which is my kind of premium research service. In that, I've gone through various ways of proving this all out. So that's what I think I can do. But your observation, I think, is really important. Okay, when people, I mean, I've sent this to quite a few people, and obviously the subscribers of Global Macro Investor are kind of the world's most famous hedge fund managers, asset managers. And I think it really shocked people and resonated with people. They're like, oh my God, everything makes sense now. And so once you see it, it all makes sense. Now, as it becomes more public as a thesis, and Mike Howell at Cross Border Capital has been talking some elements of this, liquidity, you can see liquidity becoming part of the conversation on financial Twitter and stuff now. What I think we'll probably do is create boom bust cycles. Again, you can't have the bust cycle going below the level of central bank liquidity because optically they make it rise. This is what people don't yet understand. But of course, the stock market should go down 90%. Can't happen. Literally can't happen because of the debasement. It's a money illusion. But what I think we'll do is see, hey, off we go to the races. That's what happened in 2018. 19, early 20, we actually diverged from the central bank balance sheet massively because people starting to figure out this game, which is the moment the Fed stop the tightening cycle, markets take off because they know that the probability of more cowbell, more central bank printing of money, more interest rate cuts is coming. And so therefore we get boom bust cycles. So the boom times are too big, and then you get a bust. And people know that from crypto as well. The long-term trend remains intact, but we keep getting these huge booms, collapse, boom, collapse, but the trend is still up. I think that's what we'll see. We'll be more like the crypto cycle, which is pretty much what we've just seen as well. We had a big collapse last year, and now we're straight back into the boom as we're starting to forecast this.
Powell's thesis comprises two key elements. Firstly, he asserts that the Federal Reserve and other central banks will consistently engage in printing money, with asset prices closely tied to their actions. Secondly, he suggests that while some assets may underperform against the backdrop of the Fed's balance sheet, others perform in line with it, and certain assets, such as the Nasdaq and cryptocurrencies, significantly outperform it. This forms the basis of Powell's predictive framework. According to him, investments in crypto and tech stocks not only help maintain wealth by keeping pace with the Fed's balance sheet but also offer opportunities for rapid wealth accumulation. He highlights that top crypto assets like Bitcoin serve as a hedge against monetary debasement, and may even lay the groundwork for the future monetary system. Let's return to Powell's interview.
With Bitcoin, I treat it as an asset that is going to protect my long-term wealth. And that sounds crazy when it goes up and down like it does, right? And you've just gone through that full first cycle and you're like, oh. But what you'll find is the low is higher than the last time it hit the bottom. And then the next low will be higher and each high is higher. Oh, it's in an uptrend. So I just don't need to sweat about the ups and downs. What I should do is just accumulate every time it's in a down cycle. Why? Well, because the down cycle is signifying that economic contraction is happening and that the world is slowing down and money's being taken out of the system, quantitative tightening, which is the opposite process, and assets fall. And interest rates are going up, so your disposable income's going down because your wages aren't going up enough and the interest rates have gone up more. So it's at that point, you know the outcome is if economic activity is going to slow down, the next year, in a year's time, they're going to be printing money or cutting rates because it's very cyclical for the phenomena of this rolling of this debt. So therefore, you should be buying more at these points because then you've got the next upside cycle to come, which is what I've always said is it's the cyclical trend within a secular trend. So secular trend is something long-term trend driven by a large explainable factor. Bitcoin is an answer to the financial system, and over time, the number of users and people who become aware of its superpower, the more people move across. That is a secular trend of adoption. That's really important. The cyclical trend, the cyclicality, is the ebb and flow within it. So that's the boom bust of the economy. Not at a gigantic bust level, it's just a boom bust. Now, Bitcoin halving cycles correspond with all of this. Why? Is there some magic in that reduction of supply? Maybe. But Bitcoin came out exactly at the same time that all interest rates went to zero. They're all part of the same cycle. So every time we get into this economic cycle, it affects Bitcoin in the same way. But over the long run, the adoption, the secular cycle, means it outperforms everything. Because there's no secular adoption of the S&P 500. There's no secular adoption of General Electric, or that stuff's not really happening. Yes, there's an ongoing purchasing by 401ks, but that's really it. So that big mega trend is the observable trend that people can participate in, and it is going to more than offset what is going on with the debasement of currency. And that's to do with Metcalfe's law and the exponential trend of the adoption of a technological network or a technology itself. Great. So that's why Bitcoin charts over time just keep doing this. It's because it's exponential. The S&P 500 doesn't do that because it's not exponential. But the Nasdaq does. Most technologies do. And the reason why the Nasdaq keeps outperforming the S&P and keeps outperforming value stocks and makes people so angry is because it's all about the adoption of new technology. If you think about what's been driving the NASDAQ recently, it's the adoption of AI. Obviously, that's the fastest adoption of any technology in history. Crypto was the fastest beforehand, but this has eclipsed it. It's gone from, in 6 months, from basically 0 users to 100 million users in 6 months.
Raoul points out that while the S&P hasn't increased in real terms, it has become significantly more challenging for the average American to afford it compared to 3 or 4 decades ago. This trend extends to all asset classes, including real estate, due to stagnant real wages since 1972. Consequently, Powell argues that relying solely on wages for wealth growth is akin to financial suicide. Instead, he advocates for investing in assets like the S&P to maintain purchasing power. Furthermore, he emphasizes the potential of crypto and technology assets for wealth accumulation. What are your thoughts on Raoul Pell's in-depth analysis of the economic landscape and the Federal Reserve's ongoing liquidity cycle? Feel free to share your comments and observations below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.